Yes, guys. So this is chapter number 3, guys. Money market, unit 1, demand for money. I told you guys in this chapter, beta, broadly first try to recollect, beta. We spoke about barter system. We spoke about the definition of money. We spoke about the functions of money. We spoke about the characteristics of money, guys. We spoke about the general factors that affect or that will determine the demand for money. Then we moved on to respective theories, guys. So we spoke about first classical approach. We spoke about neoclassical approach. We spoke about Keynesian theory, guys, of demand for money. Under Keynesian theory, we also spoke about the liquidity trap concept. Once we were done with that, beta, we moved on to post Keynesian developments, guys, in the demand for money. And in post Keynesian developments as such, guys, we spoke about first inventory approach, beta, given by Baumol and Tobin, guys, and then we spoke about the second one, Friedman's restatement of liquidity preference, and finally, guys, we spoke about the third one, which is the risk avoiding behavior as such, guys. Risk avoiding behavior, liquidity preference as such, guys, as behavior towards risk. Okay? Yes, sir. Now, guys, first thing first, beta, here barter system, guys, that we spoke about in the beginning. Earlier, guys, whenever there were exchange, whenever there were human wants as such, guys, to satisfy human wants, there used to be exchange of goods. There should be something better that you have, that you are ready to part with, and you want something that the others have as such, guys. So the problem was better, there was simultaneous purchase and sale transactions as such, guys. You cannot split this buying and sale. You are selling something in order to buy something as such, guys. Also better, there was a lot of inefficiencies because you'll have to literally transport that commodity from one place to the other place. It involved a lot of cost better in transportation as such, guys. And plus you also have to find a person as such better who has exactly who needs exactly what you have as such better, otherwise you will have to conduct more amount of transactions. That was barter system, guys. So this is where better came the concept of money, guys. Money is basically now the center of every economic transaction. I told you, guys, so if I want to order a pizza as such, guys, I will have to pay money. If I want to order paneer tikka, I will have to pay money as such, guys. Now you'll be like, sir, why are you only ordering food? Okay, guys, if I have to go to say, guys, a movie, I will have to pay money. So money, guys, is undoubtedly at the center of every economic transaction. Any assets better which are commonly used, assets better which are commonly used and accepted. Remember, this is the definition of money. Assets better that are commonly used and accepted as a means of payment or as a medium of exchange, guys, or for guys transferring purchasing power, that will be determined or that will be defined as money, guys. Now we know better that a bill of exchange is a medium of exchange, but it is not generally accepted as a medium of exchange, guys, so that will not be money. Remember, it should be generally used and accepted as a medium of exchange. I told you better weird examples of cigarettes being accepted as a medium of exchange, guys, in Romania. And then, guys, there was fish being accepted as a medium of exchange, guys, in a certain prison, guys. I told you how better the concept of money has evolved, guys. We all know better that people used to use gold and silver as money. Matlab, you have gold, guys. Whenever you want to go buy something, you will give gold. Gold was not satisfying your want. Gold was not directly satisfying your want, better. Gold was only helping you to transfer purchasing power. So gold was undoubtedly better. Gold was undoubtedly money. Silver was undoubtedly money, better. But then again, guys, it was very difficult as such better to carry gold and silver from one place to the other place. और भी बहुत examples discuss किए थे. It is very difficult to carry gold and silver better from one place to the other place. That is why better what these people used to do is deposit that gold and silver with the bank and take better a guys, note in writing as such better that this note is again so much quantity of gold. Instead of literally carrying gold from one place to the other place, better we can carry those notes and hand it over to the other person. So if someone comes and gives me a note of SBI better which says this is note signifies 100 grams of gold, then better I can hand over that gold, I can hand over that note to anyone better, and that will be accepted as a medium of exchange, that will be accepted as a mode of payment, that will become money. But the problem with this better again was there were different types of notes as such, guys, more than 500 notes circulating as such, guys, in one country. So that is why better the concept of central bank came into picture. They'll be like deposit all of these gold reserves better with the central bank, and the central bank will give a uniform currency, so that there is uniformity, guys. People recognize, okay, this is your currency, this is the currency as such better. So that is what better became that is how better the concept of money has evolved. If you talk about the definition given by RBI, guys, it says money is a set of liquid financial assets. We will be talking about that better in the next class. Money is a set of liquid financial assets, the variation of which better will have an impact on the aggregate economic activity. As a statistical concept, it will also include better certain liquid liabilities of a financial intermediaries, financial institutions. I told you gold was used as money, silver was used as money, tobacco products and all of that. Types of money, guys, there is commodity money. Gold and silver better commodity money. They have intrinsic value, that is value on their own as such, guys. That is value on their own. But the problem better with commodity money better is that the quality can differ, quantity can differ. I told you better that in England there were horses used to settle future payments as such, guys. So because क्या हुआ बेटा, horses were used to settle future payments, people used to give away low quality of horses. So there was literally बेटा a law passed which said that you cannot use low quality horses for settlement of payments. So quality can differ. Quantity better, again better, in certain countries there were gold reserves found. If gold reserves are found as such, guys, there's sudden additional gold supply in the market, that will obviously affect the value of gold. That will affect the value of gold, guys. Okay, sir. And then beta there was fiat money. Fiat money beta, fiat ka literal meaning beta is determination by authority. So fiat money beta represents a certain value, but it has no intrinsic value. If you have a 100 rupee note as such beta, that 100 rupee note is worth 100 rupees only because the government says so. It has been assigned a specific value as such, guys. On its own, it does not have value. That paper as such beta does not have any value. Unlike commodity money beta, the commodity has a value on its own, but this paper money beta does not have any value as such, guys. ठीक है. So fiat money beta is ordered by authority to be accepted as a medium of exchange. To be accepted as a medium of exchange can be in electronic form, can be in physical form. Now when we talk about functions of money, guys, money can be used as a medium of exchange. Money can be used better as a unit of account, or unit of account or value. Money can be used as a unit of account for deferred payments, and finally better as a store of value. When you say money being used as a medium of exchange as such, guys, remember money cannot directly satisfy human wants. You do not want money, guys. You want those goods and services better over which you can have over which better you can command power, guys, using money. Money is acting as an intermediary. Money is bringing in efficiencies better. Money reduces the cost. Money helps us in splitting the buying and selling transaction. There will be a time lag between receipt and sale as such, guys, between receipt and payment. I want to buy something today does not mean I have to sell something today better. If I have money, I can simply give money better, take that product. I am receiving money today. I do not have to spend money today. So these are all the efficiencies better that money brings in as such, guys. Money brings in. Unit of account, guys, everything better. The value of everything is stated in terms of money. You go to a market better and ask the price of a perk, they'll say 10 rupees. No, guys, I do not like perk as such better. I prefer other chocolates. As the example there, Kit Kat is much better. Okay. So, guys, if I go to market and say buy a Kit Kat as such better, they might say 40 rupees as such, guys. So that is unit of account as such better. Unit of account. The value, it is used better to post prices and record debts. Post prices and record debts. Because of this unit of account, because of this unit of measurement, better comparability has become so easy as such, guys. You can compare the price of anything against the price of any other thing, guys. Earlier this was not possible. Under barter system, there were too many relative prices. The value of horse against cow, the value of horse against sheep, the value of horse better against something else. So there were too many relative prices. All of that is gone better. Now unit or standard of deferred payment. All your future payments as such better can be stated in terms of rupees. Can be stated better in terms of rupees. Rupee beta is perfect reversibility बोलते हैं उसको. Receipt is equal to payment. Receipt is equal to payment. Of course, better under all the points, remember inflation will have an impact on money, but that inflation का concept is eliminated through interest. But inflation will have an impact on money better. The purchasing power of money better can reduce due to inflation, but we are ignoring that for the time being, guys. So if I borrow something from you today as such, guys, I can tell you, okay, boss, on a later date you have to give so much amount. So that is a unit of deferred payment, a unit beta for deferred payment. Understood? Yes, sir. So all of this beta has helped us in developing our financial markets as such, guys, economic markets. It has helped in capital formulation. Otherwise, guys, if future payments cannot be stated, it would have been too difficult better to raise capitals. Finally, better store of value. I gave you an example better wherein you're finding a 500 rupee note as such, guys, in your pocket. A 500 rupee note in your pocket, not the demonetized one, guys. The demonetized one does not have any value. Gone better, uska store of value is gone. So that has a store of value, guys, that is still worth 500 rupees as such, guys. Even if you might have put it better in that pocket 3 years back, that still has a value as such, guys. So that is why better we say that using money as such better, we are transferring the power to buy goods better from the current date to a later date. If I have, say, better 5 chapatis being received as a payment, I cannot transfer that. I cannot store that as such better for a very long period. Now you will argue, sir, gold can be considered as a store of value, silver can be considered as a store of value, but it has to satisfy multiple other factors as such, guys. Multiple other factors. There should not be any risk involved as such better. It should be very liquid as such, guys. It should be generally accepted as a medium of exchange, and it should be the unit of account. Only then better it can be stated as money. Otherwise it will not be money, guys. Then better we spoke about characteristics. Yeah, refer page 7.3 hata sakte ho because you have written all the points here. Money should be generally acceptable. If money is not acceptable better, it cannot be acted as a medium of exchange. It should be long lasting or durable. Otherwise, how is it a store of value, guys? It should be difficult to counterfeit. If people can easily counterfeit, I gave you better. I am just writing on a piece of paper 100 rupees and giving it to you. Anyone better is just copying that and circulating in the market. How will people differentiate? If people are not differentiating between what is an original one, what is a counterfeit one as such better, it will lose its whole point of generally being accepted as a medium of exchange, guys. And then better, difficult to counterfeit ho gaya. It should be relatively scarce, it should be easily transported from one place to the other place as such guys. There should be uniformity. My 100 rupee note, your 100 rupee note should be same as such guys. Divisibility, I can divide 100 rupee as such beta into 10 rupee ke 10 notes, 10 rupee into 1 rupee ke coins, easily recognizable. Now guys, demand for money beta, whatever we are learning here beta, they're all general discussion as such guys as to why people demand money. Ultimately beta, people demand money as such guys because they want to have command over the real goods and services that can be purchased with the help of money guys. There's always a demand for liquidity beta. I should be able to buy things as and when I want it, as and when I want it. There's always a demand beta for money to act as a store of value. I should be able to transfer my purchasing power from the current date beta to a later date. So all of these factors beta affect the demand of money. General points beta that we have spoken about is higher income level. You see guys, higher income level beta has come under a lot of things. जैसे guys अपना neoclassical approach talks about income levels, Keynesian theory also talks about income levels as such guys, and then beta अपने post Keynesian developments also talk about income levels. All of them beta state, except classical approach में there's no mention of income anywhere directly, but all the other theories beta tell us that higher the income levels, higher will be the demand for money. Higher the price levels, higher will be the demand for money. Higher the interest rate, higher is the opportunity cost, lower will be the demand for money. Because of all of these innovations as such beta, the liquidity has increased so much that you do not have to literally hold physical cash balances. You can hold them in the form of debt instruments. As and when required, you can convert them into money. As and when required, you can convert them into money. So the demand for money is reduced. We spoke about substitution view and income view. Substitution view beta is attractiveness of other assets. Again beta, we have seen that in Keynesian theory guys, attractiveness of other theories, other assets beta we have spoken about under Friedman's approach. All post Keynesian beta talks about attractiveness of other assets. What other assets, what is the interest rate, वो अलग, सब में अलग अलग है. Now guys, theories for demand for money beta, the first one is classical approach, also known as the quantity theory of money guys. Quantity theory of money. Now this classical approach beta, that is quantity theory of money guys, the main point of the entire theory beta is as the money supply increases, as such guys, the price levels as such beta will increase, that is the purchasing power of money will decrease. To prove his point beta is use an identity function, that is equation of exchange, wherein he writes m into v is equal to p into t. M beta is the money in circulation, V is the velocity, how many times does the money change hands in a year. I pay 100 rupees, he pays 100 rupees to someone, he in turn gives that 100 rupees to someone, he in turn gives that 100 rupees to someone. P is the average price level, T is the number of transactions. So P into T as such beta, here is the total value of all transactions, total demand of and the entire money. M into V beta is the total supply of money as such guys. So here beta, we are assuming that V and T are constant. Velocity is constant, T is constant. Because the economy is operating at full employment level, the number of transactions cannot increase. So as you increase the money supply in an economy beta, but obviously the price levels also will increase. ठीक है? Also guys, this theory later beta we have bank deposits were also included. This is where the theory modified into mv beta plus m dash v dash is equal to apna p into t as such guys. Also guys, later t was replaced with y guys, that is real GDP, and p into y beta became nominal GDP. P into y became nominal GDP. If you see guys, beta that people यहाँ पे क्या है beta summary, people will hold money beta as a proportion of total transaction value. People will hold money guys. This is the indirect conclusion that we are drawing out of it. People will hold money guys as a proportion of total transaction value. As the total transaction value increases, guys, that is price level increases, the demand for money also will increase. Or beta, as the number of transactions increase over a longer period as such guys, the demand for money will increase. So all that you have to remember in respect of this theory beta is m into v is equal to p into t as such guys. As the money supply increases, the price level will increase. Indirectly beta, as people will hold money as a proportion of total transaction value, as the total transaction value increases due to price level or number of transactions over a longer period, the demand for money will increase. We are not bothered about what are the other asset classes. We are not bothered about beta money being used as a store of value. All that is important beta here is money is being used as a medium of exchange. The only thing that we are considering beta under beta our classical approach beta is that money is being considered as a medium of exchange. We are not bothered about money being considered as a store of value. We are not being bothered about beta opportunity cost, interest rates, other asset classes, kuch nahi beta. All of that is not coming here. This is where beta we had the next theory beta, that is neoclassical approach. Neoclassical approach beta, also known as cash balance approach, or known as the Cambridge approach, or known as the beta demand theory of money. अब ये क्या होता है beta, here is The word cash balance approach is used because people will want to hold beta a certain proportion of their income in the form of their cash balances, and then beta it is also known as Cambridge approach because this theory beta was propounded or put forward beta by all of these Cambridge economists. And then beta it is also known as the quantity theory of money beta because it states that the supply of money beta is fixed at a particular point of time. So it is a demand for money beta which will determine the general price levels. It is a demand for money that will determine the general price levels. So guys, here beta as per neoclassical approach, as per classical approach, money was being considered only for transaction purpose beta, but here we are using it for both transaction motive and for speculative, for precautionary motive beta, that is as a store of value. The utility of money is increasing beta for the purpose of transaction motive. We can split purchase and sale transactions, guys. So if you are selling today beta and you're receiving money, you do not have to spend it immediately. You will need the money on a later date to purchase something. Also guys, as a hedge against uncertainties, that is as a store of wealth. He's given us the formula beta that MD is equal to KPY. Y is your real GDP, P into Y beta, P into Y beta is your nominal GDP. K beta is a Cambridge parameter as such, guys. That will depend upon the economic interest, political factors beta. तो ये क्या बोलता है बेटा K, this Cambridge parameter K beta will determine the proportion of nominal income that people will want to hold beta in the form of money balances, and that beta proportion of income, guys, will depend on both transaction motive as well as precautionary motive. As the income increases beta, the demand for money will increase. As the demand for money increases, the supply is assumed to be constant, the price levels will increase. This is the main point. Last one beta is Keynesian theory as such, guys. Keynesian theory. Under Keynesian theory as such beta, there are three important motives, also known as liquidity preference theory beta. The desire to hold money as such, guys, the desire to hold money rather than securities or long-term investments is called as liquidity preference. The preference of an individual to hold cash balances instead of holding any other asset. Three motives considered here: transaction motive, precautionary motive, and speculative motive. Under transaction motive, guys, we all know, guys, that money helps you better in splitting your purchase and sale transaction. There's a time gap between receipts and expenditure, guys. Receipts and expenditure beta. So this is why, guys, you will want to hold money balances for the purpose of conducting transactions, and this demand for money beta for transaction motive is not affected by prevailing interest rates, not affected by the existence of any other asset class. This is written as beta, this is written as LR. The demand beta for transaction motive is written as K into Y, guys. Y is the earnings as such beta. K is the proportion of earnings that you will want to hold in the form of money balances. If you aggregate all of these individual demands, you are going to get your aggregate. You are going to get your aggregate national demand. Aggregate national demand as such beta for speculative purpose. Then beta we spoke about precautionary motive, where people will want to hold money as such beta. This is store of wealth, where people will want to hold money as such, guys, for meeting any unforeseen contingencies on a later date, and this would depend upon the prevailing economic conditions, political conditions as such, guys, and individuals' preferences. It is income elastic. This is again dependent on income, guys, and not very affected by the concept of interest rates. Finally beta speculative motive. This is the desire to hold cash as such, guys, so that you can take advantage of some attractive investment opportunities as such, guys, attractive investment opportunities. So here beta he's telling us that there are only two asset classes. You either hold cash or you hold other interest bearing securities. If you are holding interest bearing securities, you will generate interest income and you will generate capital gains. If you are holding cash beta, the return is zero. So here beta we spoke about prevailing interest rates and critical interest rate. If the prevailing interest rate beta is greater than the critical interest rate, and you are expecting that the prevailing interest rates will decrease, you know, guys, that you will put your entire money in bonds and not hold any cash balances. Advantage beta is that you get a higher cash interest income. Plus second advantage beta is as the interest rates decrease, the value of bond will increase. You'll also make a capital gain. However, if the prevailing interest rates is less than the critical rate as such, guys, you will not want to hold bonds and you will hold the entire amount in the form of cash balances. Why, sir? Because as such, guys, as the interest rates are expected to increase as such, guys, you will incur a capital loss. So you will not want to incur that capital loss. Instead beta, you will want to hold cash balance, because as and when the value of bond decreases, you will be able to buy bonds at a cheaper rate, and plus anyways your opportunity cost is very less because the prevailing interest is less. This is where beta we also spoke about the individual speculative demand for money, guys. Individual speculative demand for money. This is the graph as such, guys. If the prevailing interest rate as such beta is less than the critical rate beta, you see, guys, people will hold, guys, the entire amount in the form of money balances, as such, guys. If the prevailing interest rate is more than the critical interest rate, the money balance is 0. This is individual speculative demand beta, discontinuous function. But if you take the aggregate speculative demand for curve, it's a downward sloping curve and not a discontinuous function. If the interest rates are very, very high beta, people will hold zero money balances. As the interest rates reduces as such, guys, the proportion of amount invested in bonds will increase, and the money balances, as the interest rates as such, guys, keep decreasing as such beta, keep decreasing. The money balances, zero money balances, the money balance as such beta will only keep increasing, and the proportion of money beta that you put in deposits will decrease. Beyond a certain point beta, we call this as liquidity trap as such, guys, liquidity trap, where the curve becomes a parallel line to x-axis, guys. Even if the monetary supply is increased, even if the money base in a country is increased, people will not put that money in bank deposits as such, guys. People will want to hold that money as such, guys, because people are not investing as such, guys. It will not lead to any increase in economic activity. This was seen beta in US during the financial crisis. Total demand for money beta, transaction motive is dependent on income, speculative precautionary motive is dependent on income, speculative motive is dependent on interest rates. I gave this thing as example, and then beta we spoke about the post-Keynesian developments in the theory of demand, guys. The very first theory beta there is inventory approach to transaction balances. Here beta, the money balance is considered as inventory. They say, guys, that people can either hold money, guys, or people can hold other interest bearing securities. There are no other asset class beta, only interest bearing financial assets. Every time you want to make a transfer beta from financial asset to your cash balance, there's a transaction cost that you incur called as brokerage fee. So if you transfer a higher amount, guys, so that you want to reduce your brokerage fees, you do not want to transfer frequently, remember, guys, your opportunity cost will increase because you're holding higher amount of cash balance. But then if you transfer lesser quantities of money, guys, you will have to make more number of transactions. Your transaction cost will increase, but your opportunity cost as such beta will decrease. An optimum portfolio beta will be where you try to minimize the sum total of your opportunity cost beta and the amount of transaction cost. So yes beta, people will hold certain amount in the form of cash balances, and people will also hold beta in the amount of bonds. We are assuming beta that the receipt occurs at a particular point of time, but the expenditure is spread uniformly. The expenditure beta is spread uniformly. Okay, sir? समझ में आ गया, sir? And then, guys, we spoke about Friedman's restatement of the quantity theory. This is merely an extension of the Keynesian speculative demand for money beta, but using an asset price approach. It says the demand for money beta is just like the demand for any other capital asset, which is dependent on, for the factors that it is dependent on beta is permanent income, not current income. It is dependent on the relative return characteristics, guys, the return characteristics of other assets with incorporating risk. The other asset classes that we are considering beta is not just bond, money, bonds, equities, physical goods beta, and human capital. And so also depend on the taste and preferences of the wealth owning units. 4 determinants beta that he talks about, you'll have to remember all the 4 determinants. It is a function of permanent income. As the permanent income increases, guys, remember the demand for money will increase. As the general price levels increases, the demand for money will increase. As the return of the other asset classes increase, opportunity cost will increase and the demand for money will decrease. As inflation increases, the real value of money will decrease. To compensate better for the declining purchasing power, instead of holding cash balances, guys, you will want to put the money, guys, in bank deposits. You will want to put the money beta in another asset class. So the demand for money balances will reduce. Finally, beta, the demand for money as behavior towards risk. There is this risk avoiding behavior, guys. Everyone knows that if you hold money as such beta, your return is 0. If you hold other asset classes like debt or equity, guys, you can generate return in the form of interest. You can generate return in the form of dividends or capital gains, but there's also uncertainty. There is risk involved. If you hold 0% cash, 100% other assets beta, there is high risk, high return. If you hold 100% cash, 0% other assets, there is 0 risk, 0 return. As this other return beta, opportunity cost increases, people will guys, start taking a little risk as such beta. They'll be like, okay, we are willing to take some risk, and they will start reducing their cash balances and start putting in money beta in other asset classes. So generally speaking beta, if you do not hold any cash balance, if you hold money in the form of other asset classes, your return will be the highest. But however, because you want to reduce your risk beta, you'll be willing to sacrifice your return. You will be willing to sacrifice your return. This is your risk return. Basically, demand for money beta is behavior towards risk. Okay? Yes, sir. I hope you're all clear about this chapter, guys. Do not forget to go through the notes quickly, guys. Even if you go through the notes as such beta, you will be able to revise everything. Okay? Make the best use of revisions as such, guys. Do not neglect them. Chalo, guys, we'll start we'll end the revision of this topic here beta.